Good morning and welcome to the weekend, Join the Dots. Now I'm recording this on Friday, so I don't have the market closed for the week. I'll do that tomorrow, promise. And I'll also link the Jake Claver video on protocol tomorrow. I'll talk about that briefly now, but I'll link it tomorrow. Okay, what Jake says, and it's simple really, is that XRP is not a coin, it's not a currency, it's a protocol. And it will be used to effect certain things that will need to be effected over coming years. Okay, now what that means is consider it like the internet or email, consider it like a WhatsApp. Okay, and say, okay, every time you use XRP, you pay a penny. Like every time you use a WhatsApp, you pay a penny. Can you imagine how much that would accrue each day if everyone who used WhatsApp paid 1 penny per message? I would do 200 a day. Yes, I'd cut back a bit if I was paying a penny a message, probably, but I would still do an awful lot. And that's what XRP is. It's a protocol, not a coin. If you can get that concept into your head, you can better understand the video, which I'll show you tomorrow, Jake Claver's video. Okay, I know I've left it a few days and I've had a few remarks and comments, but there are so many things coming at us now. Okay, so let's first of all go history. Okay, now I've got a very good friend in Holland who sent me a fantastic piece all about the Dutch Tulip crisis. And again, it shows that history has been abused to show something that never happened. Because no one can query it, can they? Except this guy who's taken an awful long time to research all the documents of the period and to come up with the conclusion that, no, the public didn't all rush in and buy Dutch tulips. The traders did, the dealers did, and the futures market was formed. But it was not a public crisis. People didn't sell their homes and buy a tulip. Okay, so I'm going to link that as number one because it's so fundamental to everything that I talk about on the macro picture. They are lying constantly. And you have to pick between those lies to find the truth, because once you find the truth, then you're on the right path for getting the right answer. But if you're relying on lies, you ain't going to get the right answer. It's so simple. So, another piece I got yesterday, so thank you very much myself for that. Number two, investment is akin to gardening. Now, this was a comment made by David Barker, 1221. Thank you, David. Great comparison, great analogy here. I like analogies, as you know. So, a gardening mindset, what is it? Well, you go out there every day and you look at it, don't you? And you just think, fine or not. So you have a constant maintenance, okay? Now, that's what Rick Rule says, doesn't he? Because he says if you're buying stocks, you can only buy 1 stock per hour a month that you have to spend on it. So in other words, if you're only going to spend 3 hours a month looking at your portfolio, you should only have 3 stocks because you haven't got the time to maintain the portfolio, if you haven't got the time to look at what's happening to your stocks. And that's the same with the garden, isn't it? So setting a plan to trim or encourage, maybe replace and plant seeds for the future. I think it's a lovely analogy for investment. Okay, I really do. Okay, so how's your garden looking? Is it a mess with all sorts of things that you haven't got a clue what they are? Or is it very defined and it's got a plan and that's the plan you've taken and you're going to get there? That's how I see it. Number 3 link today, and I'm going through these quite fast, but Lay's Real Talk. Now this is only the first 5 minutes of probably an hour. So you only need the first 5 minutes, okay? I'll link it. She talks about how, and I love this, I'm going to compare this to AI, okay? And what am I comparing to AI? Sludge. Sludge at the bottom of reservoirs. What? Yes, China, or companies within China, are now forming, just 2 months before they're needed, and they're coming up with a plan to take all this sludge, which has all these fantastic qualities as fertiliser, out of the bottom of reservoirs and use it, okay? Incredibly green, isn't it? Wonderful. Right, so a company is formed 2 months before and then wins an 87 million contract. What? So I'm going to link this, and I think you ought to watch that link Because again, think it through though. Don't just watch it and say, oh, okay. No. Think about the consequences. It is manufacturing money out of sludge. It's brilliant. It's absolutely the epitome of what's going on in the world. And now I'm going to link it to AI. Okay? Because it's the same process. All you're doing is creating lots of different contracts where money supposedly at some point in the future might move to complete the contract. AI. Now, I've got a link here as well, and it's to a guy called Matt. Now, my writing is terrible, isn't it? Matt Backen, I think it is. Anyway, let me see if I can pick it up on my phone because I'm struggling with that one. Let's have a look. I think it's here. Here it is. Yeah, it's Matt Bracken. Didn't see the R. Okay. I will link this, and it's all about round tripping. Now, if you haven't heard about round tripping before, it's about where people just pass things around in a circle without actually achieving anything. AI. All the contracts between the 7 or 8 major mega AI companies, they're just passing around contracts. And they are all totally dependent on each other. And that brings us to another analogy. Prisoner's dilemma, doesn't it? Prisoner's dilemma. Because what happens when the first contract starts to not quite work as it should? Who confesses to get the best terms? What's the effect on all the others? All the other prisoners caught in the prisoner's dilemma. Look up prisoner's dilemma on Google. I did this morning. I just looked it up on AI. Prisoner's dilemma. Pop, up it comes. Great description. And it describes where these companies are putting themselves. Okay? It really does. It's a beautiful one. And I've got a link on this, link 4, and it's a hedge fund manager talking about this. Tony Yoseloff, Y-O-S-E-L-O-F-F. Sorry if I've mispronounced your name, Tony. Okay, so prisoner's dilemma. Please look it up. It's really fascinating because it's where we're going. And if you can see where you're going, you can plan for it. If you're just going to take your chances and see what happens when you get there, good luck to you. Okay, so the 5th link, and I know that's a lot of links, and sorry, Craig, but you did well lifting that chart from yesterday. Thank you very much. Right, link 5. Okay, this is Eurodollar University. Now, this is a very, very powerful piece. It's a very powerful piece, and it in fact clashes with ITM trading. Okay, so ITM trading had a piece out yesterday. US banks going broke as Fed emergency lifeline is exposed. Well, we know about that. I talked about that yesterday. Okay, but what Eurodollar University, Jeff Snyder sees, and I see it more than I do the other one. And I told you in July, I said the dollar will start rising. And just every single piece on the internet said I was wrong and said dollar debasement, dollar will crash, dollar will not exist anymore, blah, 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 blah. And even the crypto boys were throwing that one at us to say we're going to have crypto. Okay? It's not true. Just get some scope, get some scale, get some truth, get some honesty, get some thought going. It's just not true. That's just a lazy one-word answer to everything, isn't it? Dying, the dollar dying. No, it isn't. And now it's not skyrocketing, as Jeff says. And again, I understand this because clickbait means you have to put something sensational, and otherwise no one watches it. Sad reflection on society, but it's where we are. So he says the dollar is skyrocketing. Here's what you must know. Now, it's not skyrocketing, but it is rising. And when it rises, it punishes every single weak economy out there. Why is it rising? Because people are going back to, and you might not agree, but it doesn't matter whether you agree, it's what's right that matters, safety in the dollar. Because the biggest economy, the economy that creates the most cash flow, the most certain economy out of all of the world is probably still America. Yes, they've got an awful lot of gardening to do to get the economy back to a sane and logical path, but they can. So he sees dollar strength as a risk, and so do I, because every weak economy in the world will be feeling dollar strength. as it returns. Now, he sees this and links it, and this is where you must watch the video, because you need to watch this to understand it. I can't explain it in 5 minutes. It's called depression economics, okay? Depression economics. And you have to understand that the dollar in that environment is deflationary. It's not debasement, it's deflationary. And the whole world is going into deflate. And that's what I said to you about tourism in Europe yesterday, wasn't it? I said to you, we're going into less tourism, less spend, less cardboard boxes being ordered, less things being transported by UPS. We're going into a deflationary environment. It's recession, depression, economics. And Tony, bless him, Jeff describes it brilliantly. Please watch the link, link number 5, Eurodollar University. And as I say, it clashes with ITM trading. That's fine. That's fine. In my world, you can have a debate. In the media world, you can't. There's one narrative, and if you debate that, you're censored, cancelled. That's it. You're an idiot. You're a moron. You don't know what you're talking about. We saw that through COVID, didn't we? No one could have an opinion. Not even a scientist, not even a top scientist could have another opinion. And yet there was absolutely zero justification for lockdowns because of the way the virus spread. Zero. But I'm going to link this. Who asked for lockdowns, really? Fauci says he doesn't know where it came from. Who asked for it? The big tech boys and the big retailers, the big box retailers, because it killed the mum and pop shops, didn't it? It killed them. They couldn't do social distancing. So your Amazons, your Ikeas, fine, no problem, come in. We'll just put some footprints on the floor and you can stand 6 feet apart. Post office, mum and dad shops, little cafe, nope, no chance. McDonald's, yeah, fine, come in. We'll put some footprints on the floor, no problem. We're a big corporate, we can do what we like. Now, just to give you another angle on that, okay? So what has the chief executive of NVIDIA said last night? China is in the lead. Why? Because he wants more concessions, more grants, more freedom to do whatever he wants, because otherwise China will win. So obvious. Corporate fascism in your face. And the point I mention this again and again and again, and I mentioned it a lot at the beginning of all these lectures I've done, is that if you don't understand corporate fascism, you're missing the plot. And you're going to miss the consequences. Because when corporate fascists get control, like these guys have, NVIDIA, Amazon, etc., Meta, they've all got control, they will get greedier and greedier and greedier and greedier because they cannot see an end to it. And yet we need to see an end to it for humanity's sake. We need to see an end to it. And this is a beautiful example because this guy now, the NVIDIA CEO, is telling Trump, essentially, through the media, China's going to win this race unless you give me more grants, more concessions, more freedom, more. It's so obvious. Now, the thing that I went to a very, very high level accounting course when I was at Manufacturers Hanover, and we had a fantastic lecturer fly in from the States, and he taught me about accounting policies. You are going to see massive pressure on auditors now, because these tech companies, these 7 or 8 companies who are writing contracts to each other in ridiculous amounts, are going to try and cheat the audit, because they're going to try and recognise revenue when there's no revenue there. And so you have to look at the accounting policies of these companies, and you see where, when it gets to the end of the book, 45, 50 pages, changes in accounting policies. And it will have revenue recognition changes, which will distort and disturb the P&L. And you can see it a second way through the cash flow. Because if you actually look at the cash flow, you will see how much money is really moving, not what they say is moving in the P&L. It's 2 different things, okay? So it's really, really important. Now, I was going to do a lot more. I'm running out of time. I'm being told off. Volatility. By the way, when you hear volatility in markets, it doesn't mean it's going up and down. It means it's going down, okay? That's the new definition. So when you see volatility appear in the Wall Street Journal, FT, etc., you know things are going down. Now, yesterday here, I'm Friday. Thursday, we saw the tech fall again. So that's Tuesday and Thursday. Can you see the pattern starting to develop? Tech falls. Okay, Michael Berry, 925 million short options. Okay, put options. So there we go. I'm going to leave it there. I could go on and on. I honestly could, but I know that Craig will tell me off. So here we go. I'll leave it there. Please think about all these things. I'm giving you 5 big links. You're on Saturday. You've got the time. Have a look at them, please, and listen to my comments against them and understand what they're telling you. Okay? And tomorrow I'll be back. I will give you the Jake Claver video tomorrow. I will talk about that, but just think of the protocol. Think of the fact that if you have to use XRP as a bridge currency, okay, and you charge, let's say 5 cents a deal, how much does it add up to? Think of 1 penny a WhatsApp. Think how many WhatsApps are sent a day. Think of the value, okay? Thank you very much.